Hi, Larry Gaines, Power Cycle Trading. Back when I was running the international trading group for one of the largest oil trading companies in the world, and currently today, we were always looking to catch what we'd call the big wave, that big trade. So it can really make your year. If you can catch that big trend two, three times a year, that's the kind of trade that can make your year. And the best way to do this, and one of the ways that we were always, looking at various market data to help us figure this out, is by using seasonality trends. So there are a lot of markets and asset classes that have seasonality trends to those particular specific markets. And one of them is natural gas. So I wanted to show you in this video a seasonality trend that's developing in a trade that we just recently put on. So this is a December natural gas. This is a seasonality continuation study. So if you look at this chart here, you'll see that on natural gas, this is the December futures contract, it tends to start pulling back and drifting off to down in mid-May, and then also has a really bigger move to the downside at the mid-June to end of June. And this trend can stay in a downtrend, into September. So it's a great trend to try to catch. Now, the key to seasonality is not only do you have to know where the seasonality trends are, but then you have to be able to get into that trend, into the cycle, without getting in at the top or bottom and out of sync with the cycle itself. So I'll show you kind of one way that we looked at doing this, and in this short video. So here's first the seasonality effect. You can see that tends to go down. Now here's another chart here that zooms in on a little bit more. So this is also December natural gas. And you can see here that in May it starts to pull back on a seasonal continuation basis. And then June, July, it has a really big seasonal move towards the downside. So that's what it looks like there for December contract. I'll show you the October contract next. So here's the October seasonality contract, and you can see this is a continuation series. Look at the sharp sell-off. Now the key to getting in this is to get the timing right. And to do that, we use the power cycle trading model to get in on the cycle. So by using this cycle model to help with entry, we were able to get into this trade on May the 27th right here. This is the natural gas futures contract, and you can see the momentum indicators were down, and this thing broke down nicely. Now this is the futures contract. We'll use this as the kind of the underlying contract to trade off of, but another really great way to do this is then to use the ETF, and for this situation we were able to use the UNG, which is the natural gas ETF, and it's a really great way to get into it. And here was the entry on the 27th, and down she goes. So it's a great way to trade. You can catch a good trend this way. You can stay in the trends a long time sometimes if you catch the perfect seasonal trade. And if you'd like to learn more about this, I'm doing a free webinar this Wednesday, June the 3rd, and let me give you the details on that. So Wednesday, June 3rd at 8 p.m. Eastern, I'll be doing a webinar trading seasonality cycles and trends. So I'll be going over seasonal fundamentals, what they're currently saying, market price momentum, what it reveals today, cycle market analysis, how to use that, market sentiment, and how to use that into your analysis, best cycle indicators, fractal analysis for seasonal trading, Fibonacci analysis, and some of my favorite cycle trade setups. So it's going to be a really great interactive webinar. So if you'd like to sign up, use the registration link on this email, and I look forward to seeing you Wednesday night. So Wednesday, June 3rd, 8 p.m., trading seasonality, cycles, and trends. The registration link is on this email. Thank you.